Morning, guys. I know we typically do the new method of live streams on YouTube. If you haven't seen them, you can check out those videos under the live tab on my YouTube channel. Today, being that it's 9 a.m. on a Sunday morning, I assume that you guys aren't really awake, so I also have a lot to cover, and thought the best way to do this would just to do a pre-recorded stream. Now, what I'm going to talk about today is some of the watchlist candidates I'll be watching for the next couple of weeks. We're going to do a quick overview of what we've seen in the market the past week. We're going to talk about our 2024 Crouching Tiger, Hidden Dragon Fractal analysis that I provided you guys back in January. And then we're going to kind of just go from there. All right. Now, first things first. When we are looking at the Fractal analysis that I provided you guys all the way back in January. Again, if you haven't read it, it has been publicly available and free for everyone to view on my Substack. You can find the links below. If you guys remember, I have done 3 major deep dive fractal analyses in the past 4 years. One in 2020 that essentially called for a break of new all-time highs, and I even provided a very precise projection on SPY, not just with price, but with time as well. And we saw those targets hit for all-time highs, I think by September or whatever it was. 2022, I had provided you guys with another yearly outlook, providing you with a fractal analysis that called for a bear market with a target of 3,500 on SPX. That target marked the bottom in October when it came. And since then, we are trading at 5,600. Okay. 2024, in January, I have provided you another fractal analysis that essentially called for continuation of new all-time highs with some max targets that I provided, which we're going to discuss in a second. When I do these deep dive analyses, and even if you're not using them to trade, it doesn't matter what your experience is in the market, just reading them in full detail will provide you so much educational value that can cover a year's worth of trading education. So I highly implore you to reread all of my publications on Substack. I don't really post weekly or daily watch lists or analyses that I do in my community, but those are the more macro perspectives that you can get out of me. And there is a lot to learn because there is so much detail that I go into in terms of macroeconomics, technical analysis, fundamental analysis. And you'll see how all these things have played out throughout the year. Okay. Now, going into the original fractal analysis, which is this screenshot on the chart, I've changed nothing on this chart. I've changed nothing in the publication. The only difference that has come is that I adjusted my level. The original publication target was 5640.88 on SPX. I readjusted it due to the fact that I realized my precision with the level wasn't as precise. So I had changed it to 5638.73. Regardless, it's a minute detail change. It doesn't really change anything. This entire fractal analysis has played out to a T for the past 7 months. You'll see that this was the projection that I had added in the screenshot. This is from the 2024 Substack publication. The only difference in this was that the initial thought was a larger pullback during the beginning of the year down into 4,600. The low was about 4680-ish before we started seeing this entire fractal play out. Even with this high here that was made back in March, and then we started to downtrend, we played this extremely well. When this bottom came, I told all of you guys, market is still going higher. I have not deviated from this fractal analysis and my original plan at all throughout this entire year. Okay. Now, when it comes to the indices, when I trade SPY, SPX, NQ, I am not a swing trader when it comes to SPX. I actually rarely ever swing indices, although I do day trade them. Okay, this is where I capitalize the most when it comes to indices, is actually just by trading SPX on a daily basis. When it comes to individual names, I focus more on swings. All right. So now that we've actually met all these targets and we have actually seen my max target on the year, I have been marinating in the idea for the past couple of months that this fractal may potentially deviate towards the end of Q3. As I've told you guys in the watch list, and I've provided you guys the same data back in January or February of the year. When it comes to this fractal analysis, at first I didn't include the seasonality of election years, which is why I think that this may deviate. However, for now, as I've told you guys all year, I am sticking to my plan until I actually see a deviation which will allow me to react and change course. With election years, the timing of this fractal analysis actually makes a lot of sense due to the historical data for presidential campaigns. August and October, this specific time frame is the most important time frame to watch because losses and gains will likely also project who wins the presidential campaign. And Trump has been leading all year long. The Democrats will try to do anything to win this campaign. The idea of them replacing Biden now with someone else like Kamala Harris or any other potential candidate is on the table. All right. But as of this point, Trump is still leading. And we're going to get a little more into Trump in terms of trading. But there was an assassination attempt on Trump yesterday. This is only going to fuel his campaign. He's going to be seen as a hero. And if that happens, then according to historical data during election years, August to October should be red months. Now, the reason why I think this will deviate is because I think at some point, if this August to October timeframe plays out and we do see more losses, and especially the first 6 months of the year are always some of the best compared to the last 6. If we start seeing this August to October timeframe play out with losses on the S&P, then this fractal will still continue to follow. And I do think that it may start deviating post-elections towards the end of the year. And then we may see new all-time highs again. These are just scenarios and ideas that I'm playing with currently, just based on what I'm projecting and historical data. I may provide a more deep dive analysis into my projected change of course later on, but as of right now, I don't think it's necessary to. So again, 56.38.73 was that level that I provided you guys. And the day we hit it, which was on CPI day, we took massive shorts for 182% and then 479% the same day. Massive moves. Okay. Now, again, on Friday, I told you guys there was a potential bounce coming. Not really surprised that we had this entire move. I was a little surprised that they swept the highs. But what you'll remember now is that the theme for our specific trading system that we've done on a daily basis when it comes to shorts is that I am very good at spotting peekaboo highs. There are always going to be liquidity sweeps at the highs. And when that happens, that is your best high RR short to take. It is the most lucrative setup to have. And we saw the exact same thing again on Friday. Thursday, with CPI, we saw the same peekaboo. We broke above this level, swept the highs, and dumped. Friday, we did the exact same thing. We broke above this prior high, and then we dumped into the close. I took 56.30 puts right into the close. All right. So again, when we're trading NQ as well, we've been doing this pretty much on a daily, weekly basis. I mean, every time I give you guys shorts, it's always at the top of the range. We always get some type of liquidity sweep, a stop hunt out of the range, and then that's when we short at a key level. All right. Generally speaking, it is very hard to short this market. I wouldn't suggest shorting this market, which is why when you are shorting, you have to be very patient with your entries. All right. You can buy the dips, take longs. Once you get that liquidity sweep and that stop hunt, that peekaboo structure that we always trade, that's when you take those shorts and you get massive, massive profitability out of it. All right. Again, this is literally what we've been doing on NQ for the past month. Every time we take massive shorts, it's always at a peekaboo sweep. Going on to some individual names. I do want to remind you guys, every week I put out a weekly watch list that focuses solely on individual names. And the whole purpose of providing you guys with these weekly watch lists for individual names is so that you can execute these swings on your own. You don't need me to hand it to you on a silver platter as I already do. Okay, you don't need to wait for me to say I'm getting in Blink August 16th, 3C. Okay, everything is planned out for you guys. specific entries, invalidation points, targets, the specific contracts you should be taking. And it's really important for you guys to understand when I do provide these watch lists, you can learn a lot about my perspective on them just by reading what I provide in terms of the strikes, the time or expiration dates, targets, entries, all of that. So for example, there are times where I give you guys individual names that have weekly expirations as my swing opportunities. There's a reason for that. That is likely telling you, hey, I expect this move to pan out pretty quickly. So last week I gave you guys two main watches. One was Blink and the other was Zillow. Blink is up 22%, 23% on the week. And this was a very, very simple ad. You guys know for the past couple of years when the market bottomed, I have found you so many bottoms on individual names. It's insane. They all have the same type of consolidation structure at the bottoms. Something like this. And it is very easy to spot. So when you're looking at something like Blink, look, the macro chart looks terrible. Looks terrible. But you take into account some factors. Number one, volume profile is amazing on this. Number two, we're still printing a higher low from the prior all-time low range. Okay. Number three, EVs have been getting another pop again due to Tesla. Now, I do have a bear case, a macro fundamental bear case for Blink, which is the fact that Elon has already started to open up the superchargers to other car brands. Okay, this can take a lot of market share away from things like Blink and ChargePoint. However, they are still widely popular. Okay, if you go to any parking garage or a gas station, they typically have a Blink or ChargePoint charging station for EVs. All right. Now, looking at this from a TA perspective, this was actually my original projection on Blink from way back in 2022. This kind of played out as I expected, but it went lower than what I initially thought it would. But we haven't looked at Blink pretty much since 2022. I haven't really even traded this since. And now we are seeing on the perspective of the chart, this is straight up accumulation. When you see a bottoming structure like this and it's rounding and it's holding prior historical support and demand, and then you see this volume here, look at the volume within this specific range. This is straight up accumulation. Straight up accumulation. And when you see this type of setup, these are the types of setups I provide you guys that provide lucrative high RR swings, even if you're just buying shares. Blink is up 23% the past week since I gave it to you guys on the weekly watch list, just on shares. The same case when it came to JMIA. Okay? I gave you guys JMIA down here around 3, the mid 3s. The day after I put it on the watch list, we got a pop. Within the same month, JMIA popped 140% from the time I added it to your watch. This is actually trading 5x from the time I gave it to you now. Okay? So again, look at this bottom consolidation structure, and you'll see a lot of similarities with many names that I provided you in the past. So when I do this, pay attention to them. Another example of very similar structures when I gave you guys the bottom on Carvana last year. Okay? So again, you'll notice here, back in May, after I came back from Miami, I saw a Carvana building the day I was leaving Miami. And I was like, oh, you know what? Maybe I should take a look at the Carvana chart. That was it. That intuition of looking at this chart was what set up this entire play. And I gave you guys Carvana right around here. It was right before this breakout of this range. And again, same type of bottom consolidation structure. Okay? And you'll also notice this was also holding prior all-time lows. And you'll also notice that within this range, you got a massive volume breakout in this consolidation. And this pretty much set up the move. Carvana is now trading 10x from where I gave you guys the bottom. Here, when you guys are trading, you have to find a system that really works well for you. And one of the things that, and I've shared these rules with you guys before, one of the things I'm very good at, that I excel at, is finding reversals. Finding bottoms and finding tops. And when I do those, you have to really pay attention. Okay? Now, let's look at Z from last week's watch list as well. This was a massive play for the week. Z is up 10%, almost 10% on the week since I gave it to you guys on the watch list. From a technical perspective, this right here is your liquidity sweep. This is still structurally bullish. But you have a bit of a stop hunt below the structure, and then a reclaim. And we started adding it back to the watch list right around here. So Z has a lot more room, in my opinion. I think this can probably run. Blink also, I think Blink can probably see 5, if not more, into 7. So with these, I've even picked up shares on Blink, and I'm probably going to enter the 5 calls for next month as well. But with the contracts I added from last week's watch list, Blink is already up, I think, 200%, almost 200% for August 16th, 3 calls on this 23% move that we had on the week. All right. Now, going back to what I was discussing with charging stations, this is the same thing with ChargePoint. You're seeing a very nice bottom here. VP looks great. High volume breakout. This could be another sympathy play with Blink. All right. Now that we're actually talking about EVs, I do want to talk about Tesla. You guys know that I have been observing Tesla for quite some time. I gave you guys the bottom on Tesla back in January. And ever since then, Tesla has really done nothing for the past few months and has not been following the market at all. Okay? With the Mag 7 seeing new all-time highs, super strong rallies, Tesla hasn't really done much. Towards the middle of last month, we took our initial swings in July 19 to 10 calls on Tesla. That was when we were trading, I think, right around here within this range. Yep. Right around here. So the initial thought of this trade was the fact that this range held the entire time. We got another sweep of this low, reclaimed, and we got the pop above this range and held. Okay? The entire trend flipped. Everything flipped. A couple of weeks later, I looked at Tesla again, and I wanted to find some further conviction. And what I started noticing is that if you compare Tesla to BTC, this looked extremely bottomed out. And again, going back to what I was discussing with bottoming consolidation structures, this is the exact type of bottoming structure I like to see. Okay, you get your initial distribution from up here, you get your markdown, you get your sweep of the low right here, okay, and then you get your gap, blah blah blah, top of the range, retest the range and holds, prints a higher low. This is just from a very simple technical perspective. And this is where we actually got in the swings. All right. From here, the 23rd is when I gave you guys that analysis. Yeah. So right here is where I started to look into Tesla in comparison to BTC. I initially started looking at it in May, and I decided, you know what, I'm going to dive a little deeper into it and see what happens. Here's where I started to find some correlation between Tesla and BTC. So what I'm going to do is I'm actually going to add BTC to this layout. And what I've noticed is that over time, you're going to see that when BTC tops, you start seeing Tesla strength increasing exponentially. Okay? Example. Here. Here. Okay? Now, previously, this wasn't always the case. Actually, you'll see it here as well. But what I did notice is that ever since Tesla sold most of their BTC holdings back in 2022, there's been a huge disparity between the two. Okay? And just look at the inverse correlation here. I mean, look, BTC bottom, Tesla starts losing strength, and this is when the entire downtrend of Tesla occurs throughout this entire year. And again, this is where I gave it to you guys, right around 68K on BTC is when I first discussed it and showed this analysis to you guys. And Tesla was trading at about, I think, 178. And from then, BTC pulled back 10K. Tesla popped 100 points, $100 since. Okay, and I'm actually going to add Tesla here as well, just to showcase to you guys. All right. So we were able to catch this rally. Unfortunately, I made one mistake. I played all my cards right. My execution was flawless. My sizing was heavy. I made one mistake of thinking when we were hitting my 202 level, the end of June that Friday, was that let me take profit. I'm going to reload on a dip on Monday. Problem was the dip never came. So the big lesson I was teaching you guys in regards to Tesla was that when you focus so much energy on one single name and you do such a deep dive analysis on this name, you need to solely focus on how to get the most out of your swing. I left an amount of money on here that I'm not going to disclose on this stream, but it's it was a lot. And everything was executed perfectly. There was no analysis paralysis. The conviction that I had on this trade was immensely high. The sizing I had on this trade was immensely heavy. It was one simple mistake of micromanaging the trade that allowed me to fumble the entire trade. So lesson learned with this is that when you have such high conviction, you cannot micromanage your trades. You have to let it run no matter what. And my target wasn't only 200. I told you guys very early on that Tesla was going to see 200 by July and we were going to break it. My target did not stop at 200. My mistake that I made of trying to milk as much as I can out of it and reload on a dip was all I needed to fumble this bag. Okay. Granted, we still hit beautiful profits on this. Every single day that we day traded Tesla, I took my heaviest sizing on that. All right. Swings, I had super high conviction on it. We still profited, but it's a huge lesson to be learned when it comes to something like this on a high conviction, heavy sizing trade that you fumble. All right. Now you guys got the idea of this. Moving on into some individual names. There's actually a lot of things that I'm kind of watching. NIO is one of them. So again, this kind of goes back to the whole idea of the EV runs and a bit of rotation into anything EV related. We're already seeing it in charging stations with ChargePoint and Blink. We already saw Tesla run. I think what's going to happen is that if Tesla does start cooling off here, people are going to find rotation into other EV related names. You can see the same thing with Rivian. You can see the same thing with Lucid recently. This can likely continue into names like NIO and Li. The only inherent risk with trading NIO is the fact that China is still a very weak market. Although we've been seeing a pretty strong bounce on China names the past week, it's still something to be cautious about when it comes to trading NIO and Li. However, again, I do like this a lot from a technical perspective. VP looks great. We're bouncing off and holding prior demand from the previous all-time lows. I think the RR is great here. My idea is to target 5 calls for next month, likely even buy shares on these just to mitigate risk a little bit more and then capitalize on more volatile moves with call options. Okay. Another thing I'm watching this week is CCL. Now, cruise lines in general have been relatively weak throughout the past few years. I think most travel has. Airlines and all this, they've been trading in the same range since the COVID highs. So there hasn't been much change on these. However, PCL does look pretty good for a breakout here, and 1899 is going to be very key for confirmation. Okay, the same thing with NCLH that I'm seeing. We're about to re-break this bull flag that we initially peekabooed from. Okay, and I do think that this has potential to continue higher. And again, this bull flag is really just trading on the prior bull flag here, just bullish retest of this. Okay, just a wider range and a longer time. All right, so these are both of these cruise lines are names that I'm watching. I also have a lot of other things that I'm watching. URA. You may remember I gave you guys the bottom on URA last year. We are now trading about 50% higher from where I provided it to you guys. I actually do think that URA has more room up. This is setting up for another breakout of this area. And from time to time, I've been kind of watching URA for potential entries and do think that structurally speaking, this is ready for another breakout. Okay. ZS. I really do like ZS. I was planning on taking some 205 calls weeklies on Friday. I decided not to, but we need to see this break out of this range, this 202.44 level, and I'm willing to take some risk on 205 weeklies when Monday opens up. PCG. PCG is another name that I've provided you guys way back down here, around 12. We did play this, and I do think that utilities are probably going to make a comeback this later half of the year. Structurally speaking, this is getting ready for another breakout. Again, we got a peekaboo sweep above this key level of 1815. You guys know this 1815 level has been on here for years. And I've told you guys this is the main level to watch out for any further continuation. So structurally speaking, this looks like it's getting ready to break out again. There is a lot of room for PCG. The initial analysis that I gave way back on PCG was in regards to their bankruptcy. And back in 2020, we played this extremely well. So I do think it's time for this again for another leg. XLU has been looking pretty good for a breakout as well. So utilities are definitely something to pay attention to. Even knee got a huge bounce back off the 2023 lows, and it's trading right back into this range. All right. Now, what do I say about structural breaks and reclaims? If structure breaks and it reclaims, it is likely to continue in that direction. And we just got a bullish retest again off this range. If I wanted to be macro bearish on knee, I would have wanted to see this break down. But instead, we got the bullish retest, and now we're trading back above this. And this is pretty much the expectation I would see out of knee. All right. Now let's talk about metals. I gave you guys the bottom on metals back in October. The day this came, I told you guys there's likely going to be an island gap reversal. And this was when gold was trading on 169. You can look at my previous YouTube videos where I discuss potential bottoms on gold and silver. And we played this entire rally into all-time high breakout. We've been nailing gold and silver all year long. And ever since then, I've been patiently waiting for another opportunity to play the breakout. I think gold and silver are going to see much higher from here. I have some macro targets on gold that are, I believe, 50% higher from where we're currently trading. Structurally speaking, this is now bullish consolidation, and we need to break this prior high in order to see another leg up. Now, I do expect this to happen, especially if the dollar starts breaking down again. I think that money is going to rotate into metals. All right, same thing with SLV. We played SLV perfectly on these breakouts all year long, and I have higher targets 33 and 35, which I plan on coming up with a strategy to take both shorter and longer dated contracts to kind of capitalize on the moves. What else can I cover today? I think that's pretty much it. Square was another one that I gave you guys recently. I pretty much provided this to you guys at the bottom of this range. Beautiful move on Square. I think Square has a lot more room. 3 weeks ago, sometime after the NVIDIA split, I had told you guys my thesis about the potential rotation within tech and how semis are pretty much done, in my opinion. And a lot of that money from semis is going to rotate into prior leaders within tech that have seen nothing in terms of movement for the past year. Some names like Square, Snow was another one. I have provided you guys Snow on the weekly watch list, literally at the bottom here. That same week, Snow popped, 15 points or something to end the week? Something like that, okay? Same thing with Tesla, all right? So I'm expecting the money rotating from semis into other names that have been weaker for the past year, and I'd like to see how those things play out. Now, IWM is another one. We were looking at swings on IWM down here. I do want to see how IWM plays out and see if we get a small cap summer. The thing with IWM is that it has a lot of resistance overhead, okay? And the daily close that we got on Friday wasn't the best daily close. I probably expect this gap to fill and maybe even retest the range here before it pops again. But definitely something to watch for the next month or so. INTC was another one that I provided you guys recently. Palantir was another one. EA, we played EA extremely well. Unfortunately, I took profit literally 3 hours too early on that day. And the contracts that we took and even averaged down on hit, I think, 3 bags. You have to understand, EA has been trading in this range for 6 years now and has done nothing. So I kind of do like EA for further upside and a breakout of this all-time high. We'll probably strategize some way to capitalize on a longer swing. That's pretty much all I wanted to cover today. With this upcoming week, again, based on my yearly analysis, I do expect some resistance to come in here at these highs. What I would really generally prefer is that they start building a range out of these highs. We haven't really built a range. And then the end of July is really what I'm going to be paying attention to into August in terms of observing how the fractal plays out and whether or not it deviates from that plan. Oh, speaking of Trump, I forgot. So you guys know we've been positioned with DJT for quite some time now. We took profits on the December trades that we had, and then it ended up getting stopped out at break even on the rest. I am still positioned in January and October calls. The assassination attempt on Trump yesterday. I 100% expect this to gap up again tomorrow. Okay, there's no doubt in my mind that this is going to gap up. This is going to be a slower play. As you guys have noticed, DJT, we have kind of a love-hate relationship with it, right? When it gaps up hard, but it can't hold the gap up. However, it's still starting to build this humongous range that we've been trading in. All right, and we are positioned with enough time that covers pretty much elections for this to play out. Okay, so I still like DJT a lot. When I trade these longer expirations, I am very lenient with my stops. I also take smaller sizing to start just to mitigate risk, but I am very lenient with my stops due to the time and the original analysis that I had projected for it. All right, that's pretty much it. If you guys have any other questions, feel free to ask me or DM me, and I will see you guys at Market Open tomorrow.